Happy Friday, traders. This is Fawad Razakzada, market analyst for City Index. So, the oil market volatility is continuing to drive sentiment. And as you can see, oil prices have fallen today on the back of a Reuters report citing a top official from the Iranian government who has said that they are ready to start talks. Now, whether or not that report is going to be confirmed or denied remains to be seen, but we've also heard from Donald Trump giving Iran 2 weeks to come to the table for talks. But for now, uncertainty remains, and ahead of the weekend, we don't know what's going to happen, and that's why we've seen a bit of risk off coming back into the markets with equity indices off their earlier highs. And we've seen gold bounce back. Oil is also bouncing back a little bit off its earlier highs after testing yesterday's low of around 74.81, and it's bouncing back from there. So let's zoom in to the daily time, to the hourly time frame, and look at price action in more detail. And as you can see, the trend has clearly been bullish throughout the last 7 days or so since the conflict has started, with dips being bought continually. And whether this dip will be bought again remains to be seen. So far, we've only seen a bounce, but if we start to go above the recent highs on the hourly time frame, specifically above this candle right here, which is when that report came out from Reuters, that level comes in at 76.21 is the high of that candle. So if we go above that high, that could potentially trigger some stops above it, and we could quickly see oil rise back towards that $78 level. 78 marks the high from last Friday when the conflict started, and that level was tested yesterday before oil prices eased off on the back of Trump's announcement giving Iran 2 weeks to negotiate. Now, if we go above 78, that could potentially pave the way for 80, which is the next psychologically important level. Above that, the January 2025 high comes in at 82.30, this level right here. So those are the next key levels of resistance or potential resistance before we can talk about triple digits, which could potentially happen if the situation gets worse. But for the time being, we are a bit skeptical about oil prices going significantly high, with the OPEC Plus raising oil output and demand growth remaining soft. Now, out of all the weeks that gold could have corrected itself, it chose this week, which is a bit surprising, but it's because of some strength for the dollar coming back. We've seen the dollar yen, for example, rally. The pound against the US dollar has struggled, and the euro dollar has failed to break higher as well, which is something that needs to be watched. So 3,350, this shaded region, is very important in terms of short-term support on gold. This level was where previously gold started the latest leg up, where the rally took out the prior high at around 3,430 area before stalling there. So it needs to hold this area on a daily closing basis to keep the bulls happy. Should it break below that area on a daily closing basis, I think that would be a short-term bearish outcome, in which case gold could potentially drop to test the trend line that has been in place since the start of the year. And if you go below the trend line at some point, I think that would be a significant development, which could potentially lead to a much sharper correction. But for now, the path of least resistance remains to the upside, given the rising trend lines and moving averages and whatnot. So we'll concentrate on the upside potential on gold as things stand. With that in mind, the next key level to watch is at 3,400, this red level here, which was resistance, as you can see, previously, before we momentarily broke above it last week before going back below it. So that level is now going to be very important should we go back above it on a daily closing basis in the next couple of trading days, in which case we could potentially see a run towards the April all-time high. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.